Hello, this is Daryl with another recording on pair divergence. And this is Tuesday, the 20th of June, 2017. And I'm looking at the pound Swiss as the base pair, the green line, compared to the euro pound, the orange line up here. And what I'm looking for here is a divergence between these two pairs. And I prefer to choose the Swissy versus the Euro. Generally, they're pretty well correlated, except they move in opposite directions. And in fact, that's what this does here too. The pound Swiss has the Swissy for the second pair, and the Euro pound, of course, has the Euro for the first pair. So first off, I have this chart set up to mirror, and it's called the overlay chart line. And here's the settings on it. The euro pound is the sub symbol, therefore it's the orange color. We have a number down here in the bottom right hand corner, which gives us our average true range of the last 14 bars. And we have a multiplier set here of 2. So this multiplier gives us 2 times whatever the average of the last 14 bars is. Offset, that just means the difference between your two pairs showing in the same chart in pips is for height. So the difference between one line and the other line should be average about 50 pips. And the last thing here of any importance is right here where it says true, and true applies to mirroring. So in other words, a chart is going to mirror these two pairs, so one of them would be reversed to its normal direction. You can also option to set this to false if you're using similar pairs, like where the either the first or the second currency is the same in both. Okay, so that's briefly the setup on the overlay chart. And this morning I saw that price is moving in a different direction. Okay, like here to here and here to here, price is moving in the same direction, which is pretty typical. As you can see, that kind of happens here to here, price is moving in the same direction, and the same with up here. Okay, and that's generally what happens when you're mirroring these two pairs. So what I saw was right in here on this one, and okay, and right in here on this one. Price is moving up here, price is moving down here. Just mark these off so it's easier to follow. Price moving up here, and price moving down here. So this gives me the divergence that I'm looking for. But it's not very clear on here, simply because there is a bit of a low right here. It doesn't really show up very good, but the overlay chart isn't the best modeling. I mean, it's very difficult to get two pair on one chart and have them be exactly precise. If you've tried to use any type of other overlay charts, you can see that, so that back in history things change a lot. On this chart they do change, but not a whole lot, so you can actually use this for back testing as long as you verify against the real currency pair. Okay, so that being said, let's move over to the live charts where we can more clearly see these. Okay, and here we go. Okay, so the euro pound is the pair on top here. Pound Swiss is the pair on the bottom. Now, I took this trade this morning. By the way, we're looking at a 30-minute chart. That's what we were looking at before. And in fact, let me show you one more thing before we go back here. On the 30-minute, the average true range is 28 for the euro pound. However, that point was taking into account this extreme move that happened shortly after London opened. The blue box here, the first blue box, denotes London open time. So this range was slightly higher. In fact, it was a lot higher than normal. This is normally be more like 21 to 25 or something like that. Okay, and going back now to the trading chart. So I've decided that this is what I want to take, was the euro pound, and I wanted to take that because, one more time back here, the euro pound was making a higher high, while this was making a lower high. So that is showing strength here and weakness here. So I want to take the strong pair if I want to go up. And this is where it kind of gets confusing, and just take my word on this, because remember, this pair is reversed. So we still want to play according to what the rules are here. And let me show you how I got into this trade. Okay, so here we have the regular charts, and let me open this one up a little bit and show you the process going on here. So disregard this for right now. When price hit this low, I'm looking to get in going long, as I tried to explain in the other chart. But looking at a 30-minute chart, we change over to candles. As you can see, from this point, there was no place to get in long. And here's why. Going back to this, this point right here, which is the low where price reversed from, had not been established on the 30-minute chart until the following candle happened, which closed way up here, which was way too far to wait to get in. So what I did was I went then down to the 15-minute, okay? And from the 15-minute, I took a look now at the candles, and pretty much the same thing happens here. Here was my low, and the 15-minute didn't close until way up here to make this a lower low. So it wasn't verified until this 15-minute bar closed. That's still no good. So seeing that the pound was really weak, which it still is, and the euro was gaining strength at the time, it was up over 5. So what I did at this point then was I went down to the 5-minute chart. And on the 5-minute chart, okay, there we go. It took a minute to show up here. On the 5-minute chart, we're down here, you see, and this was that lower low, and now we have a higher candle on the 5-minute. We have a place now to get in. So this was the lower low. This one confirms this low down here, and the close of this candle was about 96.5, and think I waited until this one closed, and my entry was actually at about 88.09, and then, well, that's with the spread, so I probably got in right about here, and it went up to my target. It was almost 18 pips. You see, it was 18. It was actually 17.1 pips was what I made on this one. And it would have gone up a lot higher, but let me show you now what gave me made up my mind as far as where I wanted to go with price. Okay, and we'll go to a 1 hour. Okay, and on a 1 hour, if we're looking right over here, you can see we have a really beautiful supply area right up in here. Bad colors for this. Okay. Sorry about the dog barking in the backyard here. Okay, let's go down. Oh, everything's moving slow. So this recording is just taking up a lot of resources here. Okay. So, all right. Now it's a little bit plainer to see, but here's this supply area right up here, and when this low, this candle right here is about 17.6, so that's where the supply area actually starts. So I wanted to squeeze as much out of this as I could, so I put my take profit right at 17, which it hit right over here. And this is a 1 hour chart again, by the way. So when it hit 17, it took me out. And by that time, though, I had moved my stop to break even plus half a pip or something like that. And that's how this one worked out. Why I chose a stop loss of, the take profit of 17 instead of 28, because my trade was based on the 30-minute chart, and the 30-minute chart gave us that number of 28. Well, actually now it's gone up, but it was about 27 or 28. Right down here is where I'm looking. It was about 27 or 28, but I saw that demand area, and I also was taking into account the size of this this bar right here. Let's see here. Okay. 30-minute. Okay. I was taking into account the size of this bar right here, which is way huge. I mean, how often do you see a 60 pip bar on the euro pound? Well, with with the whole Brexit thing going on, it's more common now, but it's really uncommon. Whereas basically, probably the average here might be this bar, which is about 13 and a half. So, but I chose still 18. My stop was only about 11, so that was still a good profit margin of about about 2 to 3. So that's it for this video, and if you have any questions,